Hello, my name is Dirk Gray, and I own a company called High Net Worth Financial Strategies. I'm going to teach you how to provide interest rates as low as 2.5%, 100% financing for your clients, and your clients are going to be higher net worth individuals because they appreciate the advantages that this kind of product gives them in terms of their cash flow ability. I started in the mortgage business in 1987. I grew up in mortgage banking, became a mortgage broker, owned a couple of companies and real estate firms, and then decided to develop a strategy for high net worth clients. I'm also a former president of the New Mexico Association of Mortgage Brokers and was asked by the Federal National Mortgage Association to sit on their task force for predatory lending. I've also been involved with $2.5 billion worth of commercial and residential transactions. So let me tell you about this product. High net worth clients need flexibility that standard mortgage products don't offer. Our company uses investment banks, private banks, and wealth asset managers to provide these products to high net worth people. Okay, let's talk about a specific scenario that you can relate to. It could be a purchase, it could be a refinance, or it could be a construction loan. But let's assume the sale price is $1.5 million. Today's jumbo pricing and interest rates would probably put you at 6 1/8, 6.125 or 6 1/4 in rate. 30% down would require $450,000 in down payment, and it's going to give you a loan amount of approximately $1 million, $1,050,000. Your payment's going to be around $63.79 per month. Okay, same scenario, $1.5 million purchase price, but we're going to go to 100% loan to value versus having to put 30% down because we're going to combine asset-based lending with a mortgage. So let's assume that we get a first mortgage of 70%. And then we're going to use asset-based lending and take an advance against your high net worth client's assets and go to 100% of financing. So we have a first mortgage of $1.05 million with a payment of approximately $28.43. We're going to use what's called a loan managed account or asset-based lending to provide the additional 30%. We're going to take an advance on your high net worth client's assets, and those advances vary. If you were dealing with treasuries, we might be able to advance to as high as 92%. If we're dealing with equities or stocks, we'll be able to advance to approximately 50%. But in this case, we're assuming that we're going to leverage the additional 30% from the client's assets. Okay, so let's break this down. Option number one requires a $450,000 down payment. Option number two doesn't require any down payment at all, none. We're going to examine your client's portfolio and determine based on what they have in their portfolio, maybe it's stocks, maybe it's treasuries, maybe it's corporate bonds. We're going to determine how much advance we can take from their portfolio. So you have a monthly payment difference of approximately $2,500 a month or $30,000 annually, and you don't have to come out of pocket $450,000 for your down payment. Now that you're armed with this knowledge, you have a serious advantage over your competitors. You're going to be able to develop the high net worth business. I know this may sound complicated, but feel free to call me or email me. If you have a scenario or a question, I'd be happy to discuss it with you. Once again, my name is Dirk Gray. Our company is High Net Worth Financial Strategies. Thank you so much for watching, and please remember to subscribe.